Good morning, everybody. How are we doing, guys? Here before it matters. Listen, it's the only thing Carl has left. He's always first, okay? Chopping fucking downward price action. Fair enough. But still downward, right? So far. Volume weighted average price, Lawrence. I don't care which way the price action goes, to be honest. You doing overnight straddles? Nice. Just chop under 4,200 by July 21, and I'm happy. Yeah, that'd be nice. It looks like we're going to get our gamma neutral test tomorrow, so it'll be, well, it'll be important. If we don't drop through it tonight on futures trading. I'm here for the hot bear talk. Okay, listen. That's later. And you've joined the wrong stream. What's up, Glowstick? Well, you just said what I wanted to hear. Below gamma neutral, I can go play games, I guess. Well, gamma neutral's like at the money right now. And well, let's see. I guess futures didn't slide that much in the after hours session. So yeah, we're like right at gamma neutral going into futures open. So we'll see what futures do tonight. It'll be uh probably important. Pull to determine the percent of pickle jar that is now straddling. This is how we will tell if the market will crash. You know, if you're straddled on SPX and the market crashes, you make a lot of money, right? World boss in 25 minutes. Girk, wrap this up quick. Good day, Frosted Flakes. What's up, Jason? I guess we should talk a little bit about how options have moved around on SPX. Obviously, we've seen a really big breakdown over the course of the week in, the upside gamma structure and like the call laddering that was occurring. I will say that there's still some OI at 4375 and 4400 that's persisted. I think there's a decent amount of it that's sold to open. But like dealer delta picked up on Friday going into close. So there was some positioning that came in, and then I'm not really sure if that got crushed with the drop into close, and if that's going to bail tomorrow or if that's going to persist through tomorrow, and we're going to see a bigger bounce on the test of like our actual gamma neutral point. Um, Obviously, like as we approach gamma neutral here and gamma neutral approaches us, the chances for a bounce are increasing, right? And so I think going into tomorrow, especially, it's probably something that we should be looking for. And I mean, obviously, hoping that it doesn't turn out to be another zero DTE pump to the moon, but uh, a healthy bounce is probably due at about this point. I'll do my best to estimate how far that could run. Right now, I think 4,400, maybe 4,425 seems to be the upside limit. But with Friday's like end of day increases in implied volatility, some of the uncertainty in Russia seems to have resolved itself over the weekend. However odd the whole situation might be. Healthy bounce due, like a healthy pullback the last month was due. I'm just telling you where the positioning is, man. Buy whatever contracts you want. Started oddly, ending the same way. I mean, I think at a point you have to ask, what was it all about, right? Was he just trying to break up Wagner Group, um, and conscript them into the Russian army? Was he trying to reposition the Wagner Group into Belarus under the guise of something else? Why has he moved nuclear warheads to Belarus and then put the commander of his mercenary forces there? There's a lot of questions after creating a very public rift between the two of them. Still scratching my head over the Russia Wagner thing. I mean, I would say that there was some motive for all of it. You know, I know a lot of people dislike Putin, and that's reasonable. He's a piece of shit, but he's a very smart piece of shit. He didn't get to where he is now by being stupid. Um, and almost everything he does or is involved in has some subtextual purpose. Oil's due for a bounce, yeah. Well, yeah, I mean, oil got crushed pretty hard last week. I think closing the week at 69 a barrel, which is a little higher up from its low. But I don't know if we're gonna see a bounce in it this week, but we're moving very close to the OPEC production cut period. We'll see if they follow through on that promise. And the uncertainty in Russia could create a little bit of volatility there as well. Why did RC move the Wagner Group to Moscow? Could you go over the straddle strategy for a popper? I have options on SPY, QQQ, but one DTEs at the money seem really high risk. I mean, they are. You need a move sufficient to push those options into the money by the next day. Not that it can't work. QQQ, I've stated before, is a little better than SPY since realized volatility and implied volatility on the NASDAQ 100 is a little bit higher. Um, but it's not very complicated. You can you can make money just simply by buying one of each contract at the money, put and call, and then selling them both when one of them prints, right? Um, so in any greater than 50 BPS move, you're probably going to be profitable on the entirety of the position. You can manage that and make more money by holding the losing contract longer, provided the market continues to trade in the same range, and then wait until that contract moves into a profitable position and then close it. Um, a benefit given to you by theta. So one DTEs, that's not really, it's generally not an option. Some days, we do open high, drop, or open low, rise, right? And on days like this where you've straddled, you can make money on both sides of the contract. But the problem with one DTEs is that the theta decay on holding the position overnight means that the losing position is going to lose a substantial amount of its value. So you'll need it to go deeper in the money in order to recoup those losses or provide any gains. We're talking about how to spend as little as possible. I mean, it's not a cheap strategy. If you have margin while you're delta neutral, you don't have as much exposure. But as soon as you close the delta, like the leg that makes it delta neutral, you'll then be exposed to losses, right? I usually get anywhere from like a minimum of 5 to a maximum of like 14 purely for straddling. If I think the market's topping, I'll start to offset theta. Like so like back here, let's go back to like the 14th, right around here. I started buying longer dated theta on the put side, right? While buying shorter dated theta on the long side because I thought the market was reaching a peak. And so the long side was only getting like 5 to 7 DTE, but then the short leg is getting like 14 to 21, right? And that way, as the market rises and I leave these short legs behind, right? When the market falls, it prints all the short legs. But this is very capital intensive. So if the question is affordability, that strategy is off the table because that requires leaving large floating positions of puts in place for multiple days. But yeah, I mean to spend as little as possible, like probably put and call at the money 5 to 7 DTE. Um you want to minimize risk, so you want to close the loser right away and try to maximize profitability on the winning side. They require some management. It's not just free money, but if managed moderately well, the returns are decent. If managed very well, the returns are more significant. Do we have significant data this week? We have a bunch of shit this week. I know Powell has a speech this week on Wednesday. We've got durable goods. We've got more treasury selling. We have home sales data. We have a Fed treasury purchase. Um, we have a bank stress test on Wednesday. Uh, Powell speaking Wednesday and Thursday. Sorry. We have GDP on Thursday, and then we have PCE on Friday. So today's a big week. You manage the QQQ straddle the same as SVX other than theta? Yeah, pretty much. I mean, I haven't done a lot of QQQ straddles in a long time, but the management of it's not really any different. Can also do in the money put call 3 to 4 DTE. Ugh, gross. I don't like guts. Why guts positioning to offset the overnight decay? That's the only advantage. Is it the stress test, you think? That causes like as a catalyst? No. Right? They knew about this shit for months on end. They wouldn't be afraid of having their capital requirements increased or being, you know, subject to regulatory oversight so soon after several of them failed. Right? No. That's insane. No, it's a fucking straddle. It's at the money. You can that if you go out of the money, you're strangling. A straddle's positioning is defined by the name of the position. Straddle. It's at the money. At the money, put and call. A strangle is any spread between those strikes. It helps when you emphasize your sarcasm. What sarcasm? The expectation of the bank stress test should be that the banks are well capitalized, sound and resilient, and are more than prepared for an event that was forecasted by over a year. Now tell us what a streusel is. A streusel is when you straddle someone else's wife. Um, and both sides of that always print. What's the significance of SVX closing under 43.50 on Friday? Do you really think there's a good possibility of a bounce? It seems so soon after just now getting some momentum. I think the effects of closing under 43.50 are there were a lot of zero DTE 43.50s that closed the day in the money. I think those would have sold off. Or they'll be exercised at expiration, I guess, or cash settled. Um, that's probably gonna relieve a little pressure on the market maker side going into tomorrow. So I think that and the net like the short put positioning at 43.50 and the fact that we're approaching our first test of our actual gamma neutral point all kind of forecast a small bounce at a minimum. We didn't close the week at or below the collar, which means that the bulls still haven't like a positive gamma environment that we're operating in, right? We're not in a negative gamma environment. The opportunity for price to slip rapidly to the downside is still not on the table. So I think it's wise to expect a bounce here. Nailed it. Thanks, Gaff. I know no one wants to hear that. I don't want to think there's going to be a bounce either, but um I think even if it doesn't, and we pick up even more downside momentum, right? Or we get, short put capitulation and that drives us down into that net negative gamma environment. Um it's better to be prepared and have it not happen than to be unprepared and have it happen, right? So I want to, I mean, I definitely want to stress the possibility of it this weekend because it's very real and it's there. Now, there's other questions, you know, that weigh on the probability of that happening. I guess the biggest one is where does the liquidity come from, especially if banks are preparing for a stress test and primes are, you know, pulling back risk. My favorite bear position is the one that requires the bull optimism to occur. Bulls don't like to go quietly into the night. They like to flee all at once in dramatic fashion. Until we get under the collar, we shouldn't be anticipating any sort of sustained downside. It's worse than that, actually. I don't want I don't want to create a lot of hope here because if we're not under the collar sufficiently by the early part of this week, and I mean sub 4,300, um, then the charm decay on the collar is going to drive prices upwards, right? So we need to move so far below the collar in the next couple days that the decay of the position doesn't drive us back up. Because the closer we are to the collar, the more delta will be hedged on it, the more effect charm will have. Are you, in fact, a half centaur? I am not. My favorite. How are your BTC futures looking? Why would I have BTC futures, Gaff? That's silly. Are you talking about my CME yes no contracts? CME told me that I could easily access robust, stable, and liquid future markets with minimal capital risk by betting on key levels and simply answering the question yes or no. Was there any update on the R2K constitution? As far as I know, GME has not been moved into the Russell 2000. That's the update on it. It's the constitution reconstitution's already begun. I think it continues for a couple more days on the ETF side this week. But it'll be finalizing soon. In the event of a significant correction, should small mid caps not be hit as significantly and or recover sooner than the S&P 7? They probably won't get hit as hard. It depends. Very stable, like cash flow positive businesses in the Russell 2000 and R1K will probably not be hit as hard. Um, Unstable, popular volatility shorts, things like GME and AMC, would probably get hit hard, very hard in a large market correction. So, broadly speaking, no. But yeah, value and strong cash flow businesses tend to perform better in the event of a crash, and they do tend to recover a little faster as well. I was just gonna ask what the role is gonna look for us. That's a potential big oof. Yeah, it is. With fear among the banks, I've been eyeing KBE banking ETF puts for August, October. Thoughts? I think there was a big bounce there Friday, right? So Maybe. I mean, obviously it's down a lot over the year, but if you think there's banking risk, that could be a position to take. I'm not sure if August, October is enough theta, but it might be. I'm talking about that sweet, sweet fake money. Also, I'm pretty sure that CME model is just how SS approached DRS. Yeah. Can we take a look at Upstart? I've got some optimistic bear spreads. I mean, Upstart started its breakdown last week, breaking through the 30 level, where there was so much short call interest and put interest is relevant on Friday. I still don't think it's broken down far enough below that level or at that level to confirm continued downside. And remember, if the indexes bounce this week, Upstart's still wildly illiquid, right? So it can pull back up. I don't know where your spreads are, but if you're above 35, you're probably in an okay position. If you're under 35, a little riskier. At least the early part of this week is. Thanks, Jen Jen. Have a good day. Although maybe all the $30 puts and $30 cover calls are just mine. I didn't really think about that possibility. Sorry, Corey. Nvidia going down soon? Well, it's got a little bit of downside over this week. Still green though. Not if QQQ bounces. Probably needs to fall back under 400 for any kind of significant move to the downside. I'm pretty sure that gamma neutral on this is around. Oh, fuck. Hold on. I just looked at it too. I just want to make sure I have the right number. Oh, weird. Yeah, gamma neutral is around 400. Maybe a little lower. I will say that call interest did continue falling off on this into the end of the week. So SPX, like, we talked about how dealer delta shot up, but like Nvidia and QQQ, uh, dealer delta dropped off on Friday into close. So those may not be quite in the more bullish position that we see on SPX. And likely because they're still kind of, well, QQQ is still way above delta neutral. Delta neutral on QQQ at 353, although it did slide under gamma neutral the last 2 days. So more potential for downside volatility on those than on S&P. Thoughts on Tesla short here? I entered one at the end of last week, when we just started to tap that like 256 level. I got 250s and 240s. I still have my 30, 35 and 40, 45 spreads open for the 21st. I think Tesla's broken down enough that we may see the retest here at the lower trend. Might be a few days, but if I go out to the 4 hour, it's a little easier to see. So yeah, I'd be targeting like a test here over the next like week or two. Ideally, I'd probably like to see that happen by the first week of the month. So July 7th, right? I mean, make sure that's the right. Yeah, July 7th. Can you talk about your expectations for commodities? Well, we're getting continued political instability, which is both good and bad for commodities. But you know, China's reopening's on track, just at a much slower rate. Obviously, that's going to be the biggest demand on the commodities market over the next year or so. A market crash or any more significant political instability can lead to large spikes in commodities. Gold futures hit 1929, 1920, breaking slightly below your 1930 level. Did you dump gold or are you holding and adding? I still have a lot of theta on the position, so I'm still just averaging in. I'm not accumulating it really fast. I probably should have done it more rapidly, but I'm glad I didn't. I waited for you at Hill and Bay on 32nd and 2nd, like you told me to. We were supposed to exchange the secret DD for the friendometer proprietary info. Why no show? Come back tomorrow. So, but I mean, I expect oil to rise into the summer. That might give some more headwinds to the rest of energy, nat gas, and coal, specifically that I have exposure on. Most of my commodities exposure is in the energy sector. For metals and stuff, that there could be some time before any kind of movement occurs there. But I do think we could see a bump in energy into midsummer, end of summer, especially if OPEC moves forward with more production cuts. With the skew on VIX OI, do you think VIX can get lower than where it bottomed Friday? If we do start bouncing, I was thinking about cutting all my more delta sensitive puts and keeping Vega ones. Um, I mean, so yeah, I mean, I think they could drive VIX back to that level. I think the problem there though is that we did pick up some volatility on Friday, right? Like we did see VIX rise a bit, and they don't have a lot of time to turn that around because tail risk is so high. Once VIX starts moving, it's going to become a lot harder to stop. And we moved up quite a bit at the end of the day on Friday. If that persists with VIX futures tonight, and those start to creep back up to like 16, 17, I could definitely see that getting out of control very, very quickly. Because everybody's going to be rushing in to pick up, those contracts, and buy that protection that they've largely been ignoring, right? Um, and that obviously that obviously like shoring up that auction and tightening up those spreads is going to drive demand, right? And then you know ultimately that's what drives the price of VIX up because of its calculation. Our contracts like September 3900 to 4000p on SPX are pretty good longer term Vega play with VIX this low. I'm not sure what the Vega is on those right now, but I'd imagine it's pretty high. They're not very far out of the money. Hold on. So 4000s for September monthly. Does look like they're like 4.67, so it's a 4x multiplier on Vega. And then, if volatility increases on a drop, your delta and Vega are both going to go up, right? And currently the 4000 September has an implied volatility of 19.4. With no change in price on the SPX and a 1% increase in volatility, you make 11%. If volatility increases by, let's say, 5%, you're 79% profitable at the money. That's with no change in price. Obviously, if the price drops, that goes up. So yeah, it's got a very good multiplier. Like VIX contracts, though, it sounds like something you want to hold and sit on forever. It's still an very far out of the money option, and obviously it's affected by theta decay at a more rapid rate. I'm looking to get some oil exposure, Oxy in particular. I don't think Oxy is like the hype oil play that people think it is. It's not gonna like squeeze or something. Um, it's more of like a long term investment in Permian Basin increased oil production more than anything else. It does have a decent amount of exposure to spot oil, but it's not going to have the same exposure as something like Exxon, right? And if oil spikes, Exxon's price is going to go up rapidly. Oxy's going to see some improvement from that, but not a ton. Most of the Oxy play is like increased dividends and increased share buybacks as their cash flow continues to improve. So it's probably closer to like BTU before the buyback was announced, right? Like that same kind of slow growth bleeding over into, improved pricing at some point. But something like Chevron or Marathon or Valero, ExxonMobil, those are going to be far more exposed to the spot price of oil per barrel. VIX and VIX futures are extremely decoupled. Well, yeah. But they are still in contango, right? How decoupled historically? I would I don't have the data, but I would say it's probably very high or near all-time highs. I'm gonna blast you with hearts. Gross. Stop it. No, that's more. Uh, do you think a sub 10 VIX is possible? I mean, yeah, it's happened before. It's, I mean, but like before Volmageddon, I mean, supposedly the rules on that were changed, right? And theoretically, it shouldn't be possible anymore for VIX to go sub 10. Like, they shouldn't be allowed to take those positions. But the market's very good at finding a new way to do the same thing twice. I'm assuming, JFresh, that you have the data for how decoupled VIX and VIX futures are. How bad is it? Like pre 2020 or worse? I have some SQQQ shares. I'm trying to understand the rate of decay and safe hold time. I found a 1% yearly hold fee, but not much describing day. That's because decay is not constant. Volatility decay is based on the fact that when QQQ rises, um, it, has a more significant impact on SQQQ's price over time than the next drop in QQQ will have. Right. So if QQQ goes up 1%, SQQQ goes down 3%, right? But then if QQQ goes down 3%, SQQQ still only goes up 3%. Right? And over time there's slippage there. So that, like, on SQQQ, that's a lower high, right? I don't, unfortunately, historically, but VIX and VIX futures are way off. Okay. I feel like that's something that we could probably make pretty quickly. I know that VVIX and VIX are way off right now. The correlation there is extremely negative. I think not not significantly, but close. Could the catalyst be they regulate margin on zero DTE more or implement a limitation of sorts? I mean, they already did the haircut. I would imagine if the DTCC felt that there was significantly more risk currently in the zero DTE positioning, they would implement additional haircuts, right? And that that counterparty risk that would be present there is there regardless of, you know whatever conspiracies people want to draw up about all the participants working in unison. How much of a headwind to a bounce would some VIX momentum be if they started losing their grip on it? A massive one. Uh, if they start losing their grip on VIX, the potential for like a crash is quite high right now. So many participants are convinced that Well, positionally, it appears they're convinced that the market will just keep going, right? And they're very confidently sold obscene amounts of naked puts on the SPX. So, yeah, I mean, if it starts slipping, right, and everyone's rushing to the door to buy that risk up, um, or buy that protection, then yeah, you're gonna. I mean, it's more than just a headwind; it's a catalyst at that point. Fair enough. Plus, MMs just profit on the volume. They can play the neutral game and win regardless. Yeah. Right, I think that MMs are one of the prime beneficiaries, right? Do you think SOM gets any traction if unemployment comes in down? Well, no. If unemployment were to drop next month, then a SOM recession would be off the table. You'd want we need an increase in unemployment. Flat won't do it either. It has to be a continued increase, ideally greater than the prior one. Anybody have any other questions about any positioning? I know Netflix was one of Pickle's picks this last week. It was just a pretty simple short. I got stopped out of it on Friday. Um, Decent. Almost made it to the price target in time. But solid returns. I don't know if any of you guys are still in that. It may continue to break down. It may not. But there's some risk in continuing to hold a shorter dated position there. I would probably wait for it to retest like 42.25 or 40, or I'm sorry, 425 or 430 before re-entering anything. Finding support a little higher than its prior trend. Well, I guess at its prior trend. Hold on. Is kind of bullish. So I think you'd wanna confirm a breakdown like a little higher here now. So if you're not out of that, that's a retest here is more likely, and then from there it can move up. So this becomes kind of a risky entry for a new short position. If this continues to break down, right, then you could re-enter a put position here with risk at the same level, and you could probably target like 395. That'll be up tonight. I'll go into that in more detail, but for anybody that misses out on tonight's post, just a heads up on that position. Any thoughts on BTI? I'm looking at position. Scoop up the dividend. I mean, I like it better than Philip Morris right now. What's the dividend? 8.46. Price target's around 45. I mean, I think your price target might be a little excessive, but to get out of it. But yeah, I don't think it's a bad price if you just want to sit on a dividend for a while. Do you have a little more justification for a $45 PT, or just technicals? I'm seeing a lot of people flipping bullish. Do you see the bull case scenario gaining some ground in general? I mean, I already think everybody uses bullish who's bullish is already as bullish as they can feasibly be. There's bears over the last week, especially, that got scared out of a lot of positioning. But no, I still think everything's pretty shit. Um, I think I think everything's also already overvalued, so there's not much to be bullish on at this point. I think in order for, especially like the top 7 stocks of the S&P 500 to gain any more value, they're going to have to show performance greater than anything they've ever shown historically for the next 4 quarters just to meet their current valuations. So, I mean, everyone getting bullish now is kind of like getting bullish at the top. It seems kind of dumb. Thoughts on Meta? I mean, still huge amounts of exposure. It's one of the few stocks that rose into the end of last week. I'd probably be careful trying to short it. I think it's pretty far away from gamma neutral and stuff. 1 second. I mean, most of the tech stuff I've just been selling like out of the money spreads on. But give me 1 second. Oh, I don't have metadata. That's right. Yeah. So I'm every time we try to calculate it, it ends up fucked up. So yeah, I'm not really sure. I mean, technically, it looks like it could go higher. It looks like it broke to the upside of an ascending trend there, and it did it on volume. So I wouldn't fuck with it. It could have been, especially Friday. It could have been short calls pulling back, and that'll probably bleed over a couple days. I'll mess with Meta this afternoon. The ticker name change messed it up last year. Oh, okay. Best year over year performance ever in a high interest rate environment. Yeah. But access to capital is still easy, right? For now. I was wondering if AMD will continue moving downward next week. Friday was interesting. I would say that an AMD move back down to like 100 on the longer term time frame here is not completely out of the question. Um, Hold on 1 second. Let me take a little bit of a look at the options chain here. I know there was some short call interest coming in pretty heavily, but I want to see what those levels were on Friday. So give me 1 second. Yeah, so the short call interest still hasn't really still hasn't bled down like below 100 yet. Like at the money right now, it's pretty it's not call heavy, but there's a decent number of calls, and Gamma's starting to move positive after the drop. So I would say AMD looks in a good position for a small bounce rather than a continuation. However, Charm on AMD fell off really hard on Friday, and that position closing may have changed kind of where the setup is here. So I would say if you wanted to short AMD here, or follow a continuation, I would probably keep risk pretty tight at like 111. Like leave a little bit of flexibility at the 110 strike because it can move up back through that, but I would say that there could be a good opportunity there, but you just want to keep risk really tight because the potential to bounce isn't gone. And repositioning of short calls after such a significant drop could have a pretty big effect as well. Does your buddy still work for Shift Search? I don't know. I haven't talked to that guy in months. When, if ever, is it coming back? I don't know. I could reach out to him and ask him, but he hasn't told. He was giving me like information on it all the time. Lumen, I think Lumen was something we were watching because it was like very similar to like GME and Upstart at a certain point. They've just got a bunch of ratings downgrades. They've been shorted into the dirt, and their earnings performance has been garbage. So I mean, from a fundamental sense, they're not a very good company. I don't think their cash flows have improved. No, actually worse in the last reported quarter. Still significantly below their book value though. And they have been shaving off a pretty decent chunk of their debt. Interesting. That might be something I'd look at. I would say that CSPs on it are probably phenomenal. Let me see here. Given that they're being like priced for bankruptcy. Nope, maybe not. Volatility at the money is actually pretty low. $2 CSPs aren't bad on it. 12% yield. 30 days. 26 days rather. So the August one looks like. August is a little better, but that's, I don't know. I might look at that some more. Any news? Okay. I like that they're able to get their debt down by 10 billion over the last quarter. Maybe there's an opportunity there. I'll have to dig into it more. They stopped paying a dividend so they can buy back debt. CSPs are real nice. Okay. I think I might like that a lot. They killed the dividend here. They lost about $10 in value since that point. Yeah, that might actually be a really good opportunity. Especially if the dividend was that significant. Yeah, I'll look into it more. What's up, Steve? Nope. Censored? Thanks for the stream knowledge you sharing. Taking family to Japan and Hong Kong to travel for a couple of weeks on Monday. I need to stay up quite late sometimes when any volatility, crazy volatility happens. Thank you so much, Steve. I don't know why that censored that. You didn't say anything bad, but I appreciate it. Have fun on your vacation. All right, let me see what Dork and J Fresh are up to. Hold on, Dork. You there?
Yo. Here I am.
How you doing, man?
Oh, doing good. Just hanging out. You know, sitting around listening to you talk about stonks with all these guys in chat.
The usual Sunday.
Yeah, exactly. It's pretty fun. I love hearing the perspectives of everybody in chat. It's always fun. I mean, I always take everything I hear with a grain of salt, but the perspectives themselves are always interesting. Someone always has some sort of insightful thing to say, and I find it exciting, even if it's not necessarily the best informed, or sometimes more informed than you think. It's really cool.
Yeah, I mean, ever since I started doing this, I've liked the multiple, even if I don't agree with other perspectives sometimes. I do like hearing all of them.
Yeah, exactly. Yeah, it's way better than like what I used to do, which was go on to social media and try to get people's sentiment from that. God, that's terrible.
Yeah, well, it's usually very lopsided. And
Exactly. Yeah.
even I think it's and this might be a bit out there, but I think it's even more advantageous than like an institutional environment where people are incentivized to have particular biases, right? And even if they maybe don't agree with their own analysis, they're not going to be like honest with it, right?
Oh yeah, the
Um,
movers and the shakers. Yeah, you don't want to scare the movers and the shakers.
yeah. Well, I mean, like you go into like strategy meetings when you're in a fund, like a couple times a week, right? And very rarely is everyone there honest about their assessment because sometimes their honest assessment means that they're not going to perform well that quarter,
Yeah.
um, and that's the last thing they're going to admit until the time comes. And so
Yeah,
I think we strike a nice balance.
I'd say so. Yeah. It's fun, and the people who we attract to are, they're active in the markets, so they're more informed than your average bear or bull. So I like
Yeah,
that.
You want some nice bull confirmation? You know how Cathie Wood's been saying Tesla to 2000 or whatever nonsense she's been saying?
yeah.
She's pretty much been selling Tesla at a consistent clip during this whole run. So that tells you
Nice.
everything you need to know about the bulls right now.
You know what always strikes me as really odd with Cathie is that ARK. So I don't know if you guys know this, but ARK, if you sign up for their newsletter or whatever, they publish daily all of their moves in the market. They believe in like full investor transparency. And so all of the fund's actions are fully transparent. And Kathy will
Before or
come
right
out and
after they
say
make the
shit like
trade?
that. What? It's
Right
after
before or
the end of the day, end of every day.
yeah, right
Yeah,
after the trades, right?
yeah. But it's
Come,
but it is every day, right? So trends are really easy to track in the fund.
yeah.
Um, but like Kathy will come out on the news and say shit like, Nvidia to 600 or Tesla to 2000 or I think for a while there she was really big on Baba and while she's selling it.
You hate to hear it from me, but all I'm gonna say is her selling Tesla sounds super bullish on Tesla to me.
Yeah, I guess.
Yeah, I don't think she's wrong about that. I don't think she's wrong to sell Tesla, though. I mean, being honest, I'm just joking because she sold Nvidia and then it rocketed, although she was taking profits.
She sold a
I mean,
lot of Nvidia before its big run.
yeah, and that hurt her performance relative to the Nasdaq for a while, but I think she's doing all right now.
Yeah, her fund usually does pretty well. And you know, in her defense, which I hate to do, but I have to, she did sell Nvidia at probably its peak realistic valuation.
Yeah.
So
Yeah,
you can't really fault anybody for not holding on tight beyond that. Like Nvidia was already at a very stable high valuation for the next 5 years at the point she sold. Now it's
Yeah,
got,
let's see what was a fair
20
price on
years
Nvidia.
of constant exponential growth priced in.
Yeah.
Bitcoin to 100K. Jesus fucking Christ. I mean, maybe if BlackRock has anything to say about it now.
I mean, I'm not gonna lie. If there was a crypto asset that would go to 100K, it would be Bitcoin.
Oh yeah, absolutely.
Bitcoin's its own like weird own like asset class. It's super weird, and I don't trust it still. But I wouldn't be surprised if it just kept going up over time.
I would say that I would expect a significant amount of regulation to come in before it ever hit those levels, but
Yeah,
um
if it gets over $1 trillion, overall market capitalization, then I'm sure regulation is going to be very, very. Uh,
yeah. I mean, it's hard to say what's the value of something that actually has no real world value.
no, I know
what's
Cathie Wood said Bitcoin to 100K. I'm aware.
What's funny is that Bitcoin to 100K still doesn't even really put it like that. Puts it up there with like the big the Magnificent Seven, but even so, like in terms of an investment that's like a some sort of hedge, it still has room to go. Like if you think about like silver, right, or gold, like doubling or tripling in value, right,
Yeah.
relative to like the S&P 500, it would be the entire S&P 500, if not more. So like I don't see that as realistic, but Bitcoin doubling or tripling is still not even close. So like I feel like room, but yeah, it would be regulated if institutions getting involved in it like heavily, which they're trying to. I mean, it's exciting for crypto
I
pros,
mean, well,
but
they're not
I
really
mean,
getting involved in it, right? They're getting involved in it synthetically.
yeah,
Yeah, which is a much better risk approach to crypto than being, a direct adopter.
yeah, it's nice to do a flow trade, right? Like you don't really risk your own money, which is great.
Yeah.
But I mean, they are still attaching, even just attaching your name to it. I mean, shows that at least reputationally, you trust it to not tarnish your reputation as a institution.
I think it's all just fraud. They just see dollar
Yeah.
signs.
I mean, it also means that they're going to kill the volatility on crypto, which is arguably its best asset.
Yeah, I mean, I
Yeah,
don't mind
I
it
mean,
at all, but I don't want to buy.
all crypto is it's a perfect indicator of sentiment, right? Because it has no other value. It
Yeah.
simply is a measure of sentiment.
Piggy bank, yeah.
The institutions
It's
need
not
to
even a
get all
piggy
of
bank.
Sailor's bitcoins first before it hits 100K.
I mean, like you're comparing it to commodities and things, but commodities have real world value to people, right? I mean,
Yeah.
people eat corn and wheat and cows and lean hogs.
Make
Nobody
shit out
eats
of
Bitcoin.
steel and
Yeah, you can't make anything out of it. You can't use it for a currency because it's too slow. It doesn't hold its value very well because it's too volatile. It literally does nothing.
Yeah, that's why there needs to be like an actual like if Bitcoin does want to establish itself as a type of asset, like a legit asset class, it needs to have a stable exchange, right? Like so like stable coins, they can get unpinned and it really fucks everything up. But like
You know what stable coins are? Just dollars.
yeah, I mean that's pretty much
We
what it is.
already have the stable coin. It's called the United States dollar.
but that's what I'm talking about, right? Like some sort of exchange that is backed by, some sort of sovereign entity could actually, solidify Bitcoin as an asset class. But until that happens, yeah, I just don't trust it because it is a giant piggy
Yeah,
bank.
but then it's a sovereign currency, which is like the only, what I would consider the only plausible remaining argument that speculators have, is that they could potentially have an independent money source. But I don't know. It's one of those things where crypto has somehow been able to survive through two hype cycles, right? So it like went through one hype cycle, so then it survived out till its next one, and now we're kind of on the tail end of that. And it's very unusual for things to survive, and hype cycles are usually like 10 to 15 years. Like the worst case is like fashion, that goes about 20. It's like jeans, they just like flare out and go in every 20 years or so, and they just cycle through the flare on the leg. No, it's true. Yeah, we're in the very skinny phase now, but we're already kind of pushing back out into the flare, so that's coming. Pink polos for men, that shows up somewhat sporadically, but every 7 years or so. We're due for a pink polo phase soon.
Salmon.
Anyway.
That's called salmon. Anyway.
Okay. But yeah, I mean, but Bitcoin, I mean, usually most things after 10 or 15 years, if they fail to produce anything tangible, people move on. And so it's unusual that it has had this much interest, but at some point, people are going to say, it's not doing anything, right? I don't know how much longer that is, but I don't imagine there's much left. Unless there's some super big innovation that happens, right? I mean, the current buzz right now, I think the reason that Bitcoin is pumping is all of these. It's a very bizarre situation, but right after the SEC sued Coinbase and Binance and all of them for running, for selling unregistered securities, all of these big names like BlackRock and I think
Fidelity, Citadel.
Yeah, Fidelity, Citadel.
Schwab.
Well, Citadel's wants an exchange, right? A crypto exchange.
The rest of them, they're making one.
Yeah, the rest of them all petitioned to get an ETF spot for Bitcoin, which is significant because right now the SEC has declined all spots, but it hasn't been from the big boys. But they allow ETF futures, ETFs and other things, so like synthetic positions on Bitcoin. So that's everyone's like excited about potentially getting ETF, spots, which would require, which gives you all the, benefits of ETFs, right? They're
I wonder how like Bitcoin doomers feel that the most highly probable chance of success is the continued centralization of Bitcoin.
I'm sure they just choose not to think about that.
Oh, okay. Yeah, that makes sense.
But yeah, I mean, I've heard, the SEC can slowball those decisions till well out into next year. Could still likely say no.
Yeah.
So it's a huge speculative. I mean, it's the same euphoria that's going on in like AI right now and everything else, right? It's like in 10 or 20 years, this might be useful, really useful. So I'm going to pump it to that price today.
Do you know what speculative bubbles hate? Other speculative bubbles. Yeah.
Well, so I do feel like we are, this is a point I kind of wanted to discuss maybe today. Okay. I do feel like we are starting to get into this area where the money that's going to go into speculation is kind of there. And now it's sort of cannibalizing itself. It's like, and a lot of people were talking about this last week on the Discord during trading hours of how like only 3 of the Magnificent Seven would run at a time and the other ones kind of like petered off.
Yep.
And so I think that's what's happening is people are literally going like, all right, Netflix ran hard. I made a bunch of money. And it's probably due for a pullback. So I'm going to pull all my gambling money off of Netflix and I'm going to dump it into AMD. I saw a bunch of people looked at AMD and it's not the Magnificent Seven, but it's pretty close. A bunch of people dumped into AMD thinking it was next, and then it just hasn't recovered yet. And they all kind of got burned.
I mean, the
So
more and more that happens, right? A lot of that, I can tell you, a lot of that is systemic flows from trading funds, right? They're just taking wins off the table and reallocating it wherever the dip is, because tech's unkillable, right? And then by reallocating, then they pumped the other half of that same basket, and then the half where they pulled their positions off starts to fall. The problem with that is that over time it's like a net loss, right? Because
yeah,
you pile into the thing on the dip and then it keeps dipping.
Yeah. Another interesting data point from the Twitterverse. Our good friend James Rowland has started issuing a few apologies for some bad calls. So we know we're getting near the top.
I mean, imagine apologizing.
Yeah.
Gross.
It's been really fun, right? Everything's just been going straight up. So people who like to buy calls got rewarded with a lot of dopamine, right? But I think now they're still doing that, and this is the point where they start getting rugged.
Yeah, you mean the Bulls are starting to feel what the Bears have felt for a month? The funny thing, though, is we've only dropped like 200 BPS.
Yeah, barely. Yeah,
the Bulls don't even know pain yet. Bulls give up really quickly. That's always been the case with any.
They still haven't given up yet.
Market. No. I saw the bump in Delta on SPX. Did you see that?
Yeah. So
in the dealer Delta?
So I could see like a little bit of a more pushes, right? But probably ultimately not super successful.
Well, here's the thing: if they buy all that Delta, and the zero DTs don't come in backed by institutions, they're dead in the water.
Yeah.
And so, like, I wanted to warn everybody this week that a bounce is possible, but if it doesn't come to fruition, we're going to see a big drop. We've already got a little fire going on VIX.
Yeah, I think we're close. Friday was interesting on VIX. It looks like they almost lost control twice, which usually if the VIX gets away from them one day, it'll just happen once. So it was interesting to see it happen twice, a little bit at the end of the day too.
Yeah.
But
well, I mean, diminishing returns, right? It becomes harder and harder to do this, and we still are at net negative gamma. So, I mean, until we get to that range, the benefit of pumping with sold puts being sold when VIX is at 13 is minimal, right? I mean, they almost need a VIX spike more than the Bears do.
I mean, I think at this point, probably what's more important than gamma, simply because there's just so much delta holding up the chain, short delta.
Yeah.
I think it's just going to be some sort of delta slide, right? I mean, people are just going to have to close their positions when the market moves against them, and that change in delta is going to swamp out, any change in gamma. So I agree, gamma's not going to be the one to initiate that sell off, but I think.
What was your take on Vega rising into the middle of last week? Like Vega exposure rising in the middle of last week and then getting crushed down with the VIX into the latter half of the week.
Yeah, I'm not super sure. I'm not super sure I've completely figured out what it is, right? Because I mean, if it's gonna spike, that means that somebody's buying Vega sensitive positions, which would be deep out of the money positions that are farther out. So that could have been the beginning of a part of that deterioration story that we're talking about, where we're
Mhm.
seeing some cracks start to form, that somebody who was very short Vega had to buy back in a little bit, which caused a little bit of, and it was obviously outside the window of the VIX.
Yeah, I think it was when we slipped the 4410, 4400 levels and stabilized, because there were big sold put positions at those levels. They're now closed.
Yeah.
But now we're pressuring the 4350 level, which is way more significant. And then beyond that, 4300, and then the big piles of sold puts at 4250, 4200.
Yeah.
Those are huge. Those are fucking billions and billions of dollars.
Yeah, I would love to see those pressured, right? Those are that's where they were pumping into those as early as like the day after the March bank stuff, right?
I don't know if you were listening in, but I was kind of discussing the effect of the collar this week as we, as charm ticks up into expiration there. If we don't go sufficiently below it, it's gonna pull us up.
Yeah, I'm certainly not an expert on this collar, but I'm gonna try to potentially temper expectations. I know there's a lot of people, are thinking that this is like a gravity well that's going to pull us towards it, but to me, it doesn't seem like that would necessarily be the case, because I'm pretty sure the manager of the fund hedges above
They
the
do.
collar.
That's correct. But as we fall closer to it, they sell that hedge, right?
Sure.
So
Okay.
so
Yeah.
they
So, I mean,
they buy futures when we go above. They go long futures, right?
right, but
So that
in the
accelerates movement above the collar. But that
no,
is
because the market maker has to go short, right?
well, yeah.
So I think the key is that once you're below it and they stop hedging it and the market maker is still hedging the other direction, that's where it can help. But I think above it, so I guess what I'm saying is I don't think that it's necessarily going to be a gravity well that's going to suck us towards it. But if something else gets us down there, it will help propel us further downward.
Yeah, I mean, theoretically, the effect of the collar should be minimal, right? I think it's the fact that every participant knows it's there, and there's so much positioning that occurs around the collar because of the collar's existence, right?
Yeah, sure. I mean, I would love to see us dump, but I don't see why they would just give up now. I mean, and this is something that a lot of people were asking as well. Like, why are they doing all this? Can they just do this forever? They're just making fat stacks and they're in
Are
great
they
shape.
though? I mean, I feel like most days the zero DTs aren't even profitable.
Well, the sold puts.
Yeah,
right?
but
I mean,
not if you blow all the money on zero DTs that close out of the money.
Perhaps, yeah, maybe they're only blowing a fraction of it, but who knows? But I mean, here's what I mean, this is a little bit of tinfoily, but this is sort of my thinking: is that these people aren't putting themselves in this very risky position, because they want to, right? I mean, you can imagine if you're a big bank, and you're sitting on a bunch of toxic, more commercial mortgage-backed securities and duration risk from treasuries and of various types, and you're worried about bank runs. Your
Yeah,
funds are
your
slowly
depositors are
drifting out.
fleeing at
Your
unheard of
depositors
rates.
are currently trickling away right now, but you want to prevent that from being a trickle or more than a trickle.
Yeah.
But you've got to keep you've got to keep reserve requirements and all that stuff. So as this trickles out, you have to go to the Fed and do their swap at their windows. But it's a slow bleed, right? I mean,
Yeah.
you're taking you don't have to mark to market, so you're not going under today. But it just accelerates the bleeding that's already occurring because you're paying a fee essentially on top of the interest rate. And so what's the only thing you can do in that case? If you just went there to get liquidity and sat on it, just to satisfy your margin or your reserve requirements, you're just accelerating your death a little bit faster than you would have otherwise. You have to take that money and you have to deploy it somewhere and try to beat that fee. And so I think that's what's occurring here. And I think, and I was talking to Dork a little bit about this last night, I think that's why I'm convinced that what the Fed is doing is quantitative easing with extra steps. Because that deployment of that money that was otherwise locked up in those other instruments is increasing the broad money. Right?
Except, I agree with that. Except those asset classes don't have guaranteed returns.
Yeah.
I mean,
True.
yeah, they're not, because I mean you still have the mechanics of the market at play, and you do have diminishing returns as well, which we've seen over the last week.
Yeah, so let me just finish this thought, right? You're this bank that's slowly bleeding and has, can live to die another day, and now has access to liquidity, but they have to deploy it to survive. What are they going to do? They're going to pump it into more loans to people, right? Which is why we haven't seen a huge drop off in credit.
Yeah.
And they're going to pump it into higher risk, higher reward, try to beat the risk-free rate by taking on risk. Right. And so if I was going to take on risk, I would sell stuff, right? I wouldn't buy. I would sell puts.
Yeah, that makes sense.
And and then ride the AI bubble, right? As far as I could take it. And I think this was happening, right? And so what happens when this stops, right? And they're all basically saying, I just got to keep doing this long enough until rates come down. Then I can unwind all of these, Fed swaps that I have and just let my duration ride. And I'll live to die.
When rates come down, they can start marking to market, right?
Yeah, right. Yeah.
Yeah.
Well, I mean, when rates come down, yes, they can start marking to market with fewer losses, but also, that money market money will start to trickle back in, and they'll likely be fine. And so they're all just basically begging, I just have to survive until they start dropping rates. And so when you start hearing things like, we're not dropping rates this year, we might not even drop rates next year, I don't think anybody really has that much runway. I mean, even the Fed window that they opened, the new facility that they created, it's only a year.
It's also almost closed.
Yeah. And so this is a very precarious situation for these people. Yes, it seems like they are just infinitely pumping and manipulating and making a bunch of money and everything's great. But they're literally just fighting to survive is what I think is occurring. And
I think that's the only reason we see positioning this obvious, like blatantly obvious, right?
Yeah. I mean,
is because it's desperate.
The worst part is that we don't have access to the information that would confirm all of this, but the SEC absolutely does.
Yeah,
the SEC already has all the information and may already know this is happening and just doing absolutely nothing. And it's infuriating to think about. I mean, I wouldn't have expected anything different, but the fact that they're doing it still makes me angry. Right?
Yeah.
Well, what could the SEC do though? Right? Like that's the big question is what would they do in response to seeing everybody pumping everything? You can't just come out and point out gigantic institutions for essentially
you can't manipulate the market.
Right, but accusing the institutions of market manipulation, like these huge institutions, do you know what the effect on the confidence in the American financial system will be? It'll be catastrophic.
It's also really not man, market manipulation is the definition of it, and the lengths the SEC is allowed to go to prove it, or it's a very narrow window. You've really got to prove significant collusion to manipulate the markets. All participants acting in their best current interest is not manipulation, right? Even if the thing they're doing isn't fair, right? There's no guarantee of fairness in the markets. Actually, there's only an attempt at efficiency.
Yeah, you could call this slippage. Like you literally, like this is really just like ultimately you could define all of what has been happening as slippage by positioning.
Yeah, and counterparty risk and self-regulation already prevent this from getting too bad, right? Theoretically. I mean, theoretically, the market will just break down because the positioning is no longer sustainable because the returns diminish over time.
So
So,
like I hear you saying like it gets harder and harder to push. I don't necessarily agree with this. I think it gets riskier and riskier, right? Because like you were saying, you have to push closer to the money. If you're actively trying to produce upside slippage, you have to get closer and closer to the money. Which
well,
with pricing staying equal, it doesn't necessarily mean that it's getting harder. It's just that you have to take more risk.
well, no. Hold on. Yes, you're not wrong. You do have to take more risk, but you also, in turn, you discount the positioning on the opposite side of the trade, right? So if you're
Yeah,
selling puts closer and closer to the money and collapsing those spreads, you're creating free puts for anybody who wants to speculate on them, right? You're guaranteed, like, eventually you cross the line and you start to guarantee returns on the short side or on the long vol side,
yeah,
right? So there really is an upper limit there, because if you start creating a premium on those, everybody in the market's going to pile into them, right?
yeah. That's kind of the essence of pullbacks.
Yeah, but I mean, to a much more extreme degree in this case.
Yep.
But I mean, that's kind of what J Fresh has been talking about with, like, vols. Long vol is free, right? In the same way that we had free calls back in October.
Yeah, puts are free.
Yeah, and I mean, eventually that's gonna be realized, right? Like that's unsustainable. So you
Yeah, I mean,
can't pump forever.
no, and it's like someone in the SPX channel last night was saying that like uh they could just keep going, yeah, and just keep pushing, right? This can bounce and just turn back around and go higher, and there's some degree of truth to that, but at the same time, what has already transpired was not cheap.
Yeah, this
In
last
terms of
push
margin,
was crazy.
yeah, like in
The
terms
move
of
to the
margin,
move to 44.48 was fucking insane, and the amount of money that must have cost, given the fact that the returns on these positions have been diminishing, is really crazy. It's just crazy to think about. I don't think
yeah,
we're going to
like
see another one like it. Not anytime
I
soon.
don't,
Not without more liquidity coming in from somewhere, and I don't see a source for that liquidity right now.
yeah, and like trying to wrap your head around the notional value, right, that has been transacted to make this happen, like it's pretty mind-boggling. Like it's so much money that like there has to be over concentration in the positioning, right, which is not sustainable.
Yeah.
Like even a big fund, like you're talking like a 1%, 2% possible, sort of allocation to this, depending on who's involved or if it's just people riding the wave, right? But even so, it's just an insane amount of money, right? Like the institutional size, like or the fund size that has to be involved is really big, and their allocations are not insignificant. And I think it just comes down to uh, sort of the whole thing that like this short vol thing, especially when there's not much going on, it's kind of a money printer, and so everyone's getting really exuberant about their ability to print money off short vol.
You know, I think the biggest bolster to my confidence over the last week in taking these short positions and holding them through absolute insanity, has been the fact that, at the end of this we were like, okay, where's all this money gonna go, right? Like, there's definitely profits. They've made money on it. They've beat, JFresh's discount window plus premium. But, at the end of that, when the returns break down, the money has to go somewhere. And then, the beginning into the end of last week and the beginning of this week, we start to see 5 to 30-year yields absolutely crushing, right?
Yeah.
And that gives me a lot of confidence moving forward that we're going to see more and more of that money that has now beat that risk-free plus premium from the backstop move into those high premium or those high yield treasuries. And
Yeah, they're not buying the rip.
here's the thing about that, though, is once that money moves into those treasuries, that liquidity is out. And so we're seeing that that pullback in liquidity that we've waited so long for, right? And it's not, some of it's from Yellen and her T-bills, but a lot of it is just them now taking that capital out of equities fast and moving it. I'm really interested to see the flows going into this Wednesday. I haven't looked at them yet, but I would imagine that the outflows in equities this week were pretty significant. I'd imagine fixed income funds are seeing quite a lot of bolstering.
Yeah, that wouldn't surprise me one bit. I mean, well, like that chart JFresh shared from whoever it was, like the earnings yield on the S&P 500 is lower than the risk-free rate. Like,
Yeah, at least for this year, right? They're still, I think, and the the interesting thing is that the earnings estimates keep going down. They're not getting better. I think it's now down for 2023. They're expecting $214. So that's
Ugh.
like 4.7% of the current value of the
That's down
S&P.
that's down like 6% from where it was a month ago.
Yeah, it's been going down. I mean,
6%.
it's kind of asymptoting. It's kind of slow and kind of tapering off, but it's still trending down. Next year they're looking at like $240, which is just at or a little above the risk-free rate. So for the next 2 years, you are basically guaranteed to not outperform risk-free in the equity markets. So I mean, I think there's still people there out there that are looking for value in individual names or maybe in subsectors. We haven't seen any rotation of any real kind yet, so I don't think that's occurring. I think people are just still kind of YOLOing onto individual names because there's no more index returns left for the next 2 years, right? And that's with a lot of assumptions about soft landings and all that, right? So it could be even worse. So if you think if I have money and I want to go put it somewhere and I say, well, I can get a risk-free return, guaranteed return of 5%, or I could gamble and if I'm lucky make 5%, and if I'm unlucky lose a bunch of money. What are most people gonna do, right? So
I mean, more importantly, institutions are going to take that and run with it, right? Regardless of what individual investors do, institutions will always take a win in a risk-free rate over any kind of risk, right?
Yeah, I mean, at some point, I think kind of like what you were saying, they made money. At some point, they have to think that their luck is run out. They can't continue it forever, and they don't want to be caught, trying to catch the falling knife. Yeah, I think that's right. I think that money's simply just going to move out.
Yeah, and you'd expect this to happen with a pivot, right? But so much hope this year has been thrown into a Fed pivot without it ever even coming close to materializing at any point. And now the Fed is, plotting out 2 more rate increases. J-Pow has been, I got to give him at least a little credit on this. He has not backed down from the fact that the majority of Fed participants agree that the additional rate hikes will be necessary, and maybe even more beyond that, right? And then, now bonds, ever since the week before last, bonds are pricing in a 0.25 and a half, so a 1.5 more 0.25 increases. So they're pricing in like 0.37 right now, 0.38. They don't ever fully price until the first one materializes, but that means that they're going to price in an additional 0.08 or zero point 0.7 on the next rate increase, right? So and up until now, the bond market has been reticent to price in any future rate increases, but now they are.
Yeah.
And the realization of those being priced in has not been priced into the equity market yet, right? The last time we were pricing in a forward rate increase was in December, and we were trading at like 3,600. Right now we're pricing in 1.5 more increases, and we're trading at 44.
Yeah, I mean, and that's another interesting point too. I think I believe based on the way that the fees work, that the people who took loans from the Fed can now essentially finish out their term window by just buying like 6-month bonds because the rate's so much higher now than the current risk-free rate.
Yeah.
That I think now they can just float that.
But either way, that's liquidity out of the equity market for 6
Right.
months.
I'm just saying.
Yeah.
I'm just saying. The things that looked really attractive before, like a month ago, when we were, trying to figure out where this goes.
Yeah.
I mean, we're. Let me think about the best way to explain this, because I know some people have been, a little tired of hearing us every week saying like, I don't know, I don't think this can go much higher, and then it goes higher. I mean, before we were looking at the past few months, what we have been doing is saying, all right, here's the space in which money can play. And it is unlikely that the money is going to play in this area to the maximum amount, because it rarely ever does. Right? And so we just keep saying, well, we're already, this many standard deviations away from normal behavior. It's unlikely that we would continue going.
Yeah.
But we have now gotten to the point where everything is so insane that we're literally just hitting the actual limits of the playing field, right? You can't. We're right on the out of bounds line. There's no more room. just fundamentally, from a mechanical standpoint, looking at all the money, it's a zero-sum game. All the money has to go somewhere, and the money wants to be positioned as efficiently as possible, right, for the participants. There's no more room here from a mechanical perspective. So if it continues to go higher, something is way off. Right? I mean, it would just.
I mean, if it continues to go higher, you just increase the chance of it breaking, which is kind of how I've felt for the last month anyway. And the fact that we did go
this
higher.
This is why we can't have nice things. This is why soft landings and all that stuff are pipe dreams and can never happen, because we do shit like this. Right? Yeah. If we had all just like stopped consuming a little bit over time and accepted marginal returns and not like a fucking 100%, rally spree on the Nasdaq or whatever. It's like the best first half of the Nasdaq ever. Maybe 99 beat it, but I mean,
did it? I'm not sure it did.
I'm not either, honestly. I mean,
but at least in the, I will give the .com bubble this.
When you put yourself in a cannon and launch yourself up into the air.
The .com bubble was at least diversified.
Yeah.
Like there were a lot of overvalued companies. That's not true. 7. Yeah. And part of that pump is flight to safety, right? Most investors don't understand putting their money in treasuries, and they see one position going up and they're like, and another doing nothing, and they're going to sell their Caterpillar and buy Apple, or they're going to sell their, R2K, like, hard cash flow stocks, and they're going to buy Nvidia, because looks good, right? Stock go up,
and everybody wants some fraction of exposure to the market, so they have to put it somewhere, because they refuse to go all bonds or all something else.
And that's a big driver of breadth too, right? Is that sentiment shift that you get there. And don't forget that
So
when everyone talks about our analysis, there's a lot of like normalization bias going on, right? We were bullish as fuck. I'm gonna lay this out there publicly. We were bullish as fuck from October, mid October, all the way through February.
Yeah,
Calls were practically free.
we
We
looked
we
at,
we
we
noted
were
the
like, oh
risk and
shit,
liquidity for the
the
banks.
SPX hit Vanna neutral at 3,600. There's no more
Yeah.
volatility to the downside. We have to go up, and then we went up.
And
And then in December, when we had dropped, I think JPAL dropped some kind of bomb or something, and we dropped like 300 or 400 BPS, and then we
mhm.
just sort of floundered in that flat area,
Yeah,
and we
he
were
did the
just like,
point
all right,
0.5.
yeah, this is all sold calls. They're gonna unwind. They're gonna unwind, and we're gonna melt up, and
Yep.
then we did, and then that continued through February, and then we're like, okay, there's a bunch of charm that's expiring at the end of February, like a massive amount. We're gonna start dumping there, and then we started dumping, and then
Yeah, and our
the bank
liquidity
failure.
concerns from December were realized with the bank failures in March, and then again in May. You know, and, and,
So
and
I
for
think the
much of
biggest,
that period, we also just like after the money came in from the Fed, we just traded at 4,200. Like our time
yeah,
spent trading above 4,200 still is minimal.
yeah. So I mean, I would consider myself caught very off guard after the bank failures. I don't think I fully appreciated the effects of liquidity that were occurring, and
I
really understanding that these big players had no other choice but to pump the market.
Yeah,
Um,
that's where I think the failure in the analysis was, at least in the short term. I still think long term we're correct.
oh yeah,
Um,
yeah.
but
This shit's
yeah,
gonna
I
end.
think the failure in the short term was not that we didn't see the liquidity coming in from the Fed. We were very worried about it. I don't think we saw it coming 100% into the equity market, which it
Yeah,
almost did. I don't think we realized the rate at which depositors were going to flee banks. I don't think we fully grasped the amount of risk present, right? And it was hard to, you know, JPAL was coming out saying we're going to bail them out, we're going to backstop this, it's going to be okay, right? And he's still saying that to some degree, but it's really not. And it takes, you know, with our limited access to data, it does take a little longer to figure out how fucked everyone actually is. Um,
it's taken a little while as the data's come in slowly, but
but
so
yeah, I think we're in a much more stable position now, and we're gonna start to continue to see the effects of this all break down.
so this may just be for my own ego stroking, but back in December and January, I was warning about the face ripper, is what I was calling it.
Yeah, yeah.
Right.
No, you were.
Yeah. So
We were all considering that, but we also thought, and let's not deny this, we kind of thought Feb was that face ripper, right? Because Feb got followed up with that bank failure. And in hindsight, it looks like Feb was the realization of that pump that they needed to get out of their equities, right? We didn't think
well,
it
I
was going to
was
come again later. We didn't think it was going to happen three
yeah,
times.
I mean, sure, but like at the same time, when I spoke of like, and this is purely just because I'm you know on the tinfoil scale, I'm much higher than the two of you. But I was definitely saying this like in Jan and Feb, I was saying like this is a, you know, it's pump, whatever, but like it's not like I'm talking like I was saying like specifically like the people on the news are going to be very confused about what's happening. You know, like that I was pretty adamant about how like the market will just go up and up and up and hard and no pullbacks and just fucking just completely fly in the face of any expectations, especially if the economic data turned around, which it did.
Yeah,
But like I was just saying, like it's just going to completely defy reality and just go anti-gravity. And that's when I kind of made the statement, you know, the higher this goes, the more bearish I get. And I think this, you know, it was definitely the face ripper, right? Like you don't get a year's worth of performance in the S&P 500 over the course of a month and a half.
2 weeks.
Yeah, like you don't get that normally ever unless it's the bottom of a crash, which we didn't have a crash, right?
Yeah.
So like the only time that happens is when somebody knows something, and I am very suspicious that somebody knows something, or various somebodies know some things, and they really want to get out of their equity positions. And having indices be really high presents a good opportunity when you need to do a lot of selling, to be able to get an average fill above, your buy price or just at max profit.
Yep. Yeah, if they start selling now, they could be out of everything by 3,800.
Yeah, and they could be out quick. Like
Mhm.
it's because it's so high. Because it's so high, even a flash crash is not necessarily a big threat to their position.
Yeah.
So like it's I'm super duper bearish because of this crazy pump, but I'm not going to go full porting puts because I'm not an idiot, and the market could remain more irrational if nothing happens and these things these people know do get pushed out by a quarter or two. Like we could just trade flat for like a month or two or something or whatever. Like it's a
Yeah.
super irrational market.
When does quarter two earnings pick up, team?
We're getting close.
Got to be soon, right?
We got
I think that is
July, end of July. So about a month out.
okay. Yeah, so we have some time. I think what could happen, just trying to look at the the cases that I don't expect but could happen. We could simply just flounder here.
I think if we flounder a little lower.
Yeah, I think we could go down and flounder. I think all the bulls are still just saying this is a healthy pullback, are ready to pump more money in.
Well, they just wait for the bulls to average down at like SPX at 4,200, then they dump it, right?
And there is going to be some pressure over time if we don't see a significant pullback. The FOMO is only going to intensify, right? People are going to want they don't want to be the ones that didn't get some of these returns. And I think that this clown circus could continue until earnings it becomes clear enough that people are simply too optimistic in the short term.
Well, there's really big
I also
similarities
expect
between this and like 08 that me and Dork kind of were looking at on like the VIX yield 10-2-year yield curve comparisons that we were doing last week, and
yeah.
there's like when Lumen failed, there was a lot of liquidity pumped into the system, right? And we saw markets outperform. Like Bernanke came in with a bunch of liquidity, and like they lowered rates, right? And and then ultimately we had more failures down the line, but I would say this isn't too different from that in a lot of ways. I mean, obviously there's other things like CMBS being this big threat that it never was then. MBS a threat being almost equivalent, right? We were kind of talking about that last night with these people are buying houses above market value with cash, but they're not cash buyers. They're simply getting cash from the mortgage facilitator, right? Like they're being under written a mortgage, and then they're going out with the cash from the bank and buying houses sight unseen, no diligence on the title, no inspection on the property.
Yeah, how does that work? I would love to get more info on how that works, because I mean, if they're getting the mortgage and the cash to buy the house before they've selected the house and done anything, like is it an asset-backed mortgage? Like what the hell is that about? Do they go back to the bank and then like revise it to include the address? Like I just
Yeah, I think basically is like you're getting an upfront personal loan, like 30-year personal loan,
and then you
right?
refi it.
And then well, not really refi it. The bank's just finishing writing it after the house
That
is
just seems
selected.
like borderline fraud. Like how
Yeah,
do
it
you
is.
how
I mean,
It is.
it's similar to what was going on with subprime mortgages in '08. It's different. It's a different approach, but I would say it's happening at an even greater rate because we've already
they need
discussed
the
the banks,
rates?
right?
Yeah.
Like banks need to loan that fucking money out.
Yeah, you think banks are, over the moon about holding all this shit and writing all this shit? Absolutely not.
Well,
Well,
They
like,
know that they're not going to last, and they're going to have all these houses they're going to have to try to sell, and it's going to be another nightmare.
so short-term rental properties, the yields on those things have actually crashed, right?
Good.
So anybody who is speculating on short-term rentals right now is underwater on their yield, if not, their actual loans, right? And that's primarily where a lot of due diligence was missed because you like the type of loans they were getting, you didn't really need like any proof of income to get these loans. So anybody could go and buy an Airbnb house with no money down and practically no background check.
oh, actually, on that note, I don't know if anybody in the pickle jar works in the mortgage industry or like underwriting. But if you could, and you have any information on the availability of 5-year arms to negotiate rental contracts on short term like Airbnb properties, I would love to know how
Unlock
prolific those loans are because
specifically in the Long
I
Island
was
area.
watching this banking lending conference and they were discussing um, filling their books with these 5 to 10 year arms that are being used to negotiate 5 to 10 year leases on like Airbnb and Verbo and like type properties. So basically, somebody's getting these like adjustable rate loans, um, and then using that capital to negotiate a 5-year lease on the property from the property owner, under the assumption that they're going to rent that property on a like daily or weekly basis over the next 5 years and accumulate profits to pay off this loan, except they're not doing
That
that anymore.
sounds insane.
And I really wonder how common these loans are because the way they were talking about them, it seemed like this was their new favorite, most exciting product that they were offering people. And I mean, I can see why from a bank standpoint, but I can't see who the fuck would be taking these loans out.
God,
That's been
bunch of
happening in
Well,
dinosaurs.
Canada
idiots.
for the last 2 years.
Canada doesn't exist.
Yeah, that's not a real country.
Yeah, like
Every time we bring
and
up housing shit, all the Canadians want to get involved. We
well, it's
know
because their
your
houses
housing
are
market's
expensive.
fucked. It's
Yeah.
Yeah, there's only so much room to build houses in northern Washington and northern New York, upstate New York.
don't forget Quebec, little
Yeah. So
France.
so the thing is like we may actually get a correction earlier than earnings season, right? Because if a company is going to end up underperforming expectations, right, they'll generally issue some forward guidance, saying, "Hey guys, might want to tamp
I
down your
mean, it's
expectations."
something like
Mm.
66
The only
companies
the
in
only
SP
the only like big
500.
seven I know that do that are like Microsoft, maybe AMD. Google has, but rarely. Apple basically never does.
Yeah, I
Well,
mean,
I'm
it
just
says 7 companies. Something's got to trigger a sell off of those 7 companies.
well, didn't FedEx just issue a downward revision to their earnings guidance?
Yeah.
Probably.
Yeah.
Nobody cares.
Well,
They're
But
that's
FedEx,
e-commerce.
Yeah, FedEx is the lifeblood of our of commerce.
Amazon's pumping. Nobody cares.
UPS is also down a lot because of the worker strike.
Yeah, like so we could. I mean, the thing is if one of those big companies does say we're probably not going to hit expectations, that alone can reverse.
I mean, they're all
sentiment.
already saying that. Look at the insider sells. I just saw there's a massive Walton family insider sell on Walmart the other day. Nvidia's been insider selling off. I mean, the big ETFs and big holdings are making big sells on big names like Tesla, like we talked about earlier. No, it's just I don't know what it's going to take to wake people up, but
I mean, if institutions expect earnings for the next quarter to fail on upgraded guidance, they're going to be mostly out before earnings ever occur.
yeah. But then there's these, expectations of this magical 8 to 11% earnings
like quarter
growth in the
one
last
2022, right? Like where we had a big drop into an even bigger drop on negative earnings.
That was the growth scare.
Yeah. Well, now it's back.
Yeah. So
No, we're
especially
gonna
with
magically
GDP this week, right?
Quarter four is gonna have 11% growth magically.
13. It's all gonna be okay. Everything's gonna grow by 13 in the fourth quarter. It's the fucking forward expectations are absurd.
It's insane.
yeah, I mean the valuations that people are pricing in with their expectations are just they're just asinine, right? Like so. Anyways, I posted a chart, Girk. If you want to,
Yeah.
Ooh.
if you want to discuss what's going on with like kind of like what we were looking at.
This is our cool thing.
Yeah, and I'm gonna post another one in just a second here. Sort of. So
Ooh, no axes, labels. I love it.
It's great, yeah. So I can describe what the colors are. I'll try to go through this a little bit.
Yeah, we don't have to give away methodology to present data.
I mean, well, this methodology is, I think, pretty straightforward, and people generally tend to look at this stuff anyways. I mean, we're just kind of looking at it and making assessments about it.
I'm gonna call this blue.
So I mean, I don't feel too bad talking about it.
Yeah, I'm not.
But like the green line is like super, like the green line, everyone should recognize this, right? At least in terms of its shape. But the red line should be a little more interesting for people. So the green line, right, is the green line is just the 210 inversion, but it's reversed, right? So it's basically the percent difference between the 2-year and the 10-year note in terms of yield. So like if it's greater than 0, the yield curve is inverted, right? So it's kind of like yeah, it's the inverse of the yield curve inversion. The red line is the percent difference in closing price of the 1-year and 2-year continuously rolling VIX future. So it kind of shows you that points of financial stress come when the yield curve inversion and the spread between the 1 and 2-year VIX future invert, right? That's when volatility hedging in terms of like volatility hedging becomes less advantageous for people who are long bonds, right? And I think it's been a while since I've talked about this, so correct me if I'm wrong, but I think that what happens is as the yield curve inverts more, your ability to hedge your duration risk with volatility, or your like floating rate risk with volatility diminishes.
That was the assumption that I was operating under.
Yeah. So
when we made these.
Yeah. So in the second chart, right, what I'm illustrating here by putting a line at the 0 mark is periods of contango in the 1 and 2-year volatility futures or VIX futures, right? So we enter into contango, we did at the beginning of 2022, And then we did it again, heading into the October lows. We tapped contango when
You mean
SVB collapsed.
backwardation?
Yeah, because this is the inverse, right?
Yeah.
Yeah. So, anyways, yeah. So when you go above zero, that means that volatility hedging in the near term, has
Is
spiked.
higher. Yeah.
Yeah.
That's
So,
backwardation.
okay. Right. Sorry.
No,
Anyway,
you're good.
I'm a dumb. But yeah, so we're pretty deep in negative territory right now, right? And consistently so, right? There's not much volatility in this sort of measure, which goes to show that there has been a lot of complacency in volatility hedging. If there's a word to describe what the market is doing,
I would say
people are.
it's not complacency. It's I think the risk is more defined than that. I think it's just ignoring the potential for convexity.
Yeah, I mean, maybe not even ignoring it, but pricing it out.
Yeah. Okay.
Which, like you could see it happening in 2021 too from this chart. It's very obvious that because of QE and the Fed buying, like doing the mother of all dip buying, convexity just disappeared from the market. And right now, we're practically pricing it the same way, right? Which is totally weird, considering economic data really hasn't materially improved. It stayed the same, which for a lot of people means recovery, but for me, it kind of means we're not doing anything.
I mean, if you look from their last period where risk was appropriately priced, or tail risk was appropriately priced, right? In March to now to May, early like end of April, beginning of May, like that decline and yeah, that mimics a bull market, right? If you look at the post 2020, right, return from backwardation,
Yeah.
but no longer, right? Now, that, like, that was we already saw like the max risk peak occur in this market, and now we're still negative, but well, how do I want to put
It'll
this?
spike.
What?
Yeah, it's mostly what I'm saying is that
It'll go up.
yeah, like it's basically saying that tail risk is just, this is just another way of illustrating the mispricing of tail risk, right? So
Yeah.
as risk, sort of becomes more and more unavoidable in terms of like, concrete evidence of tail risk still existing in the market, even for the Magnificent Seven. Something like, say, accepting the reality that 5% interest rates, 5.5% funds rate, and the cost of debt being above 5%, means that having 11% year over year growth is perhaps not exactly the most realistic expectation.
Yeah.
We will see a snapback, right? And that's why we see those consistent snapbacks through 2022, right?
We
Like
should
during like the
probably
growth
also
years.
note the rate at which these happen. The more negative it is, the faster the snapback is.
Yeah.
Yeah.
Yeah, depending obviously it depends on, the current economic conditions and sentiment in the market, but yes, that's generally correct. Like you'll get these violent snapbacks, and that's sort of where VIX will spike, right? Because short-term volatility expectations rise precipitously.
Yeah.
So yeah, it's another way of showing sort of like the volatility spring sort of being coiled, right? And it looked like it was gonna snap back in May. And also, it just pretty much just in May, it was gonna snap back, but it didn't, right? And for various reasons, we could call it vol shorting or whatever. It's remained mispriced. So this sort of lends credence to the idea that it really is like a face ripper, right? In absence of any sort of concrete proof, right? You have the promise of AI. I guess that could fuel this sort of a mispricing, but I think that there's no conviction in the AI saving the economy in the next 2 years.
Yeah. Also, like companies like Apple have zero involvement in AI, no, and nor do they have any forward projected
That okay.
involvement in AI, and yet they're still pumping. So I don't know if
I
we can. I don't know if we can count them as part of the AI bubble, right? It's just tech at that point. Like it's
I
like
want to
people
be
are
a
buying Amazon. Amazon has no intention of increasing AI infrastructure spend, right?
I want to be a bit of a nerd here, because I think this is important, and I think we're talking about this the wrong way. The what people call AI is actually a lot of other things, which isn't actually the AI that people are thinking of. When most people think of artificial intelligence, they think of general artificial intelligence, which
Yeah.
is like an android or a machine that's as smart and as capable as a human, or more so, right? That can do a bunch of general tasks when asked. To the degree or better than a human being. That doesn't exist. There's no chance of it existing in the next 10 years. There's no roadmap to get there. There's no, fundamental knowledge required to even know how to get there, right?
We're not
It
even
seems
sure if
like,
we understand if it's something that can be replicated.
yeah, I mean, it would question a lot of things philosophically about what a human being even is. So we don't know if it's possible because we can't measure the things uh, that would tell us if it's possible, right? So that tells you how likely it's going to happen in the short term or even the medium term. What also is AI is actually machine learning, because at the underpinning of all AI is just take a bunch of data, fit a line through it, and use those lines to predict what's going to happen in the future. See when you see similar inputs, right? You do that a trillion times, and you've got ChatGPT.
I'm gonna
But that
reiterate my favorite saying: stochastic parrot.
Yes, you have the stochastic parrot. You put in some inputs and it predicts what output you most likely want to see, with some randomness thrown in so it's not too rigid. The stochastic parrot. Uh, that idea is really machine learning, and that has existed existed in the marketplace as a product for well over a decade, and has already shown to be something like 3 to 4% or so of all the technology gains and earnings, right? So that is already baked in, and that's already people expect that to continue occurring. Um, what everyone's getting crazy about is generative AI, which is just the stochastic parrot, where you can put in inputs and get an output that you didn't expect, but that you find that you want, right? Or what we call art. Um, to see that generating more revenue even in the next 10 years than machine learning already is, I don't see how that could be, right? Because machine learning is all about
Yeah,
optimizing really complex systems, without having to basically to write enough equations to determine this very complex system is too expensive, but you can get enough correlations to get close enough that you can optimize it. Um, and there's a lot of value there, and that's occurring everywhere, right? And has been for a long time. And so, yeah, I just don't see where all of these new magical earnings are going to come from.
they're
And I think
not.
that,
That's why they're being projected to happen and not actually occurring. Like I'm not entirely sure based on reading Nvidia's earnings that they have received any money for anything. Even all the you know GPUs that they moved from one inventory to another to make it look like they sold them instead of they're
yeah,
just
that
sitting in a
that was really
warehouse.
strange. I think what they did, they might have done, like their
Is
traditional
reflash
graphics
the
card.
BIOSes.
No, because I think what they did is they placed that inventory on the inventories of their resellers.
Yeah, I could see that.
Okay.
They
But
just
that's
Um,
dumped
that's
that on
just
the
like
market.
on loan then. That's
right. It, it's
okay.
it's it is a right. There's an expectation that the resellers will sell their inventory and not give it back.
Yeah.
Right, or that they'll sell it for market rate, right? But yeah, I agree. I don't trust Nvidia at all. I don't think they're being truthful. And it'll be interesting to see how little is done about it when the scam, crumbles.
Well, yeah, and like the questions during the earnings call too, like I found those so interesting, right? Like nobody was asking, anything like, hey, what's going on with your cash flows? Like you're really,
Why are your revenues down 30% year over year?
yeah.
And I
Yeah,
mean, like they point to
going
their
to be
big
buying
they,
these
they they
$12
point to
billion
their big R
in
and D spend, right? And they're like, oh well, we spent all this money on R and D, and now the profits from that R and D are being realized, but they're not, and those profits aren't going to be realized the next 10 years. In all likelihood, they'll never be realized at the current rate they're being priced in. I mean, did you look at the Aswath's breakdown of Nvidia? He went on a big like cocaine fueled rant on Twitter this weekend, and
who?
I've taken classes with him at NYU. He's arguably one of the best esoteric value estimators in the business, right?
Will you put a
From
will
a
you put a
purely
link to that?
academic standpoint, huh?
Will you put a link to that in the announcements?
I put his charts up on the Discord. I'll find you the link to his blog or whatever.
Okay, yeah.
But like even he's having a hard time, and he's a Nvidia bull. He owns Nvidia and Microsoft, and he's having a really hard time finding any valuation metric above like $270 over the next 10 years for Nvidia.
For Nvidia?
Yeah. And it's funny to and because he's a bull, it's kind of funny to watch him try to cobble together this, because if you know anything about valuation, it's very easy to change one figure or your perspective and looking at the valuation of a company and get what you want to see, right?
10 years out, right? You just have to tweak, your uncertainty is greater than the tweaks you make, right?
Yeah. And
You could
so
have like
he's
0.2
kind of
or
valuing
0.3%.
Nvidia, at like 270 is 72% overvalued over
270
the
after
next
how many years?
10 years. So in 10
Yeah.
years, maybe they could achieve a valuation of 270.
I mean, that sounds about right. I mean, that
That's yeah, no,
doesn't
he's good.
sound
Don't get me
insane.
wrong. He's very theoretical. I will say that. I don't love the guy. I don't want everybody chasing him down and trying to ride his dick. I think Graham and Buffett are much better in practice investors of businesses, but he has created the industry standard for valuing things like startup tech, where valuations are a little harder to grasp. Not that I necessarily agree with everything he does, but the fact that even with his experience and being bullish on Nvidia, he's unable to achieve the valuations the company's trading at, I think is hysterical.
I could come up with an explanation for it, but it's so speculative, right? Basically, AI as a product has to grow to like a trillion and a half dollar market,
No,
and
bigger. It has to go bigger, because that's assuming that Nvidia has 100% of the market share.
that's what I was going to say was that
Okay.
and dominates the market, right, entirely, not just the hardware but the services too,
Yeah.
right? Like or AI as a industry, has to grow to like 10, 20 trillion dollars over the next 10 years, and Nvidia has to maintain, something like a 30% market share on that industry, you know, eh, even I guess like 25%, 30%, and that industry is not just including hardware; it's including services, right, tangentially and otherwise. And it's just not going to happen like that. Like
I I
the
mean, like,
valuation makes no sense.
I want to get like a
Yeah,
little nerdy now with that, and like there is no defined services industry for AI. Almost all of it is
right.
open source.
What is it going to do?
Yeah. I mean, so
Everyone's like, oh, it's going to
how
change
do
the
you
world
sell
in ways we
something that's
can't
already
imagine.
free?
Well, you can. I mean, like if you make the if you make the service really bitchin' in your own way, you can sell it, right? So like you take AI
But you have to
and you do
change it so much from like the core open source
and
concept, right? That like it
here
can't be
here's the
just
thing
reverse
too.
engineered.
It's going to scavenge from other places in tech, right? It's not going to simply add, it's going to scavenge, right? So if Microsoft Word develops AI tools to help you write letters and shit or whatever, right? Or Google's got like letter assist,
Generative
email
AI emails.
email assistants, right? I mean, that's already being baked in, and it's just cannibalizing, existing yields, right? I mean, it's not like it's not like it's Gmail's just going to magically get more email writers, and if they do, those email writers are just going to be leaving another place, right? It's not just going to magically create more emails that have more value, right? So the fact that nobody can really even describe like where are these increases in productivity going to materialize is very worrisome to me. But if you want to have some
Gordon
fun,
says pharma, and I agree the folding aspect of like generative AI and
that's already
creating,
ongoing.
but
That's
it's
been
already been
happening. I
happening. Yeah, this has been
I know.
priced into
Yeah,
pharmaceutical companies for 5 years.
I know, folks. I mean, I'm involved in some efforts where we're using or planning to use some of these machine learning tools, to look for new compounds based on like successful compound creation in the past. So, and this kind of goes back to like what machine learning is, right? Instead of having to completely deterministically understand every possible thing that could happen in a very complex system, you just fit enough curves to enough successful data and let the computer just sort of guess what the correct states are, and hopefully it'll be better at guessing than you, right? And that's already occurring. That's not a brand new thing that's going to revolutionize, chemistry or pharmaceuticals. It's already doing that, and they're getting marginal gains like you expect, 3 to 5%.
Yeah. I mean, well, so in terms of the future of AI, right? Like we're kind of stuck on these large language models, and it's kind of hard to wrap your head around, kind of the applications because it's so nebulous, right? And so that's why I think that, yeah, like short-term growth projections are way out of whack, and I think it's super overvalued. But long term, right, like AI does have the potential to do things like create more efficient aerodynamic designs for airplanes, things like that, more cost efficient, maybe more fuel efficient.
Yeah,
You know,
that's all machine learning though. That's not AI. That's machine learning, and it already exists. It's already being done.
but it could be a. I'm not. But you see, you're sort of putting yourself in a box by saying it's all machine learning, like all day long.
Everything that you're talking about is machine learning.
I mean, kind of, but you could use a generative AI to come up with a unique sort of design for, say, an airplane or a car.
Yeah, that's what we call it. We call that machine learning topology optimization, and that exists. I know people who've done this. It's actually it's actually really inefficient. It takes you like a it takes you like a year of running these simulations to find a few good optimums, and you don't even know if it's the global optimum or how sensitive it is, and so there's a long way to go before that's just crapping out things. Very expensive and still very but it's being done, and it has a name, and it's machine learning topology optimization. No, no. We don't have a road. I keep telling people until until I see an IEEE roadmap to the general, artificial intelligent automaton, we're not within 10 years of it. But see, but
Oh,
here's the thing. Like for
you
example,
guys can hear me, but the stream can't.
Oh,
Amazing.
could they not hear any of that?
No, they heard you guys. They just didn't hear
Oh,
me.
thank God.
Yeah.
Thank God. I'm not saying all that shit again. But like, so for the case you just brought up, the drive-through attendant, you don't even need AI for that, right? Because you have so few inputs and outputs.
Yeah.
Just deterministically create it, right? That's why you have touchscreen menus everywhere.
But how
Because
many
it's simple
drive-through
enough.
operators are there in the United States?
What the solution to that is not to create a fake drive-through operator, just to eliminate the drive-through operator, right? Just
I
like
understand.
just like bagging your own groceries, you don't
But
have to use
we're,
AI to create a grocery bagging
so
station.
McDonald's saves, McDonald's franchise owners, not even McDonald's, but McDonald's franchise owners each save, a cumulative salary of like 10 employees over the course of a year per location times however many number of locations globally that have drive-throughs, right? Or order takers of any type. But now the rest of the economy is robbed of that economic input from that entire
Right.
class of people, right? And so
It's
so the
scavenging
idea that this
itself.
is creating some sort of like utopia is insane to me, right? Like the better generative AI gets at simulating the work people do for money, the worse the macroeconomic environment becomes, right?
Well, that's why people like, and again, not new and not specific to generative AI, which is garbage and a
I
hype
know, I know.
nonsense. But
Don't worry, I'm not trying
people,
to lend any credence to
I know,
generative
but
AI.
people, I just want to make that very clear that I hate it, and I like saying how much I hate it. So I'll continue doing that. But people like Bill Gates and others are, already talking about this problem and have been for a long time. Trying to come up with things like, looking at like universal income, paid for by taxes from, AI services, for example, to sort of replace, humans. The robots will literally be working for the humans. Um, Obviously, that's a very pie in the sky thing, but yeah, what you're describing is the most likely outcome. So I, yeah, I agree. I don't see how this is. First of all, it doesn't exist. There's no plan for it to exist. And if it could exist and could exist soon, I don't see how it's going to improve the economy. More likely, it will just strain it.
It'll just increase inequality to astronomical levels. Like even further,
Yeah,
like,
but
stocks will go up, but not.
where does that end in an economy where over 70% of the economic activity is consumption?
Yeah,
Right.
not well. Like a post. I said this in the Discord the other day, kind of joking, but kind of not. Post capitalism is not bullish.
No,
No.
not for the
Anyway,
pores.
yeah.
Yeah, exactly. It's super bullish in terms of the fact that you will guaranteed get an oligarchy out of it. But I mean, not with the oligarchs, you're fucked.
I mean, as long as the AI is not smarter than them too.
I mean, the oligarchs are a bunch of fucking idiots. So the moment the AI becomes smarter than the average idiot, it's going to be smarter than everybody.
Yeah.
But I don't see the singularity, happening really. Like, like
Neither does anybody else. There isn't. I mean, even the most bullish researchers on AGI are like 5 to 10 years, and that's with all the capital investment in the world, right? And
Yeah.
sure, yeah, like the incoming capital investment's going to accelerate things, but most of them are pretty steadfast in the idea that we're 20, 30, 40 years away from any kind of artificial general intelligence
Yeah.
that can actually replace human critical thinking.
Like I said, show me the IEEE roadmap, and I'll invest.
What's the IEEE roadmap for quantum computers?
25
I actually
years,
don't know.
right?
Because if we can get a functioning quantum computer that can actually process like 10,000 qubits, then I mean, at that point we do have the capability to hit the singularity, right? That's kind of the next
Well,
step.
at that point, crypto becomes worthless, right?
And so does cryptography.
Security goes to zero. Yeah.
Yeah, no,
We'll have to decide real
yeah.
quick if we want to have a peaceful world order or not.
I would say quantum is much more realistic as existing at some point in the
I
future.
mean, it kind of does exist already,
because
right?
the physics are understood. Largely, the issue with quantum is not is it possible, which is where we're at with general artificial intelligence. It is how do we make it efficiently and cheaply enough to deploy in the economy, right? And so it's really a manufacturing issue and not like a physics issue, right, or a philosophical issue.
Yeah,
and they might have a roadmap. Actually, I've looked at, like, for example, IEEE Semiconductors roadmap. You go back and look at them from like the aught thousands. They fucking nailed it, man. They're like, predicting when they'll get, like, 5
When
3,
1
4
nanometer chip, and are they gonna make them in Arizona?
No, they're kind of running out of space, right? They're getting it. Ironically enough, they're getting into quantum effects, right? So if you start to make the if you start to make the features too thin, all of these computers work on turning on electrical conductivity in various places, right? So you need it to be very low and very high when you want it to be. And when you start making things that thin, then you start getting quantum tunneling effects where the electrons can just magically pop over to the other side. And so you lose your on-off switching ability below, a few nanometers. So they're about out of room.
Yeah, that's why I'm saying the quantum computers are like the next feasible step from pretty much where we're at now, unless there's some sort of advancement in the actual like size of the chips, right? Like, I don't know how you can't get through quantum tunneling effects without some sort of crazy esoteric solution. And at that point,
the issue is not the size. Oh damn, Girk.
He's not. I think he's muted in the.
Okay. Sounds like he's negotiating for another car.
Probably.
Anyway.
Yeah.
So the issue is, and I don't want to get, obviously this isn't an engineering podcast or anything, but I mean, the biggest issue is the efficiency of the switching. The stream, sorry. It's the efficiency of the switching, right? So, I mean, the transistors that you have today in your computer can operate over 100 gigahertz, right? But they have to cycle how often they use them because they generate too much heat and it's too hard to get through of it.
What if I delid my processor and drown it in liquid nitrogen?
People already do that.
I know.
And yeah, submersion. Anyway, yeah. But my point is that these are all great discussions to have about future technologies that are going to exist eventually because the physics are understood, and it's really just an issue of how do we manufacture it? But it's not like crazy, right? You could imagine that if you tinker long enough, you're going to come up with the right tools to make the thing you understand how to make, right? But with generative or general AI, nobody knows how to make it. So why are we investing in it like it's going to exist in the next 5 years if nobody even knows how to make it?
Question: when Higgs boson circuits?
I mean, I don't even know what that would do. What does that even mean?
Nothing. Nothing. Yeah, it's incredibly speculative, and I think it's just it really is like this is this is just my opinion, but I think this AI hype cycle is definitely sort of a classic exhibition of fear, right? I mean, like it's the first thing in the last 2 years or more, after the crypto bubble, like it's the first thing that has popped up that has shown any semblance of promise, for economic growth. And so everyone is just latching onto it with both hands with a death grip.
That's because nothing else is showing any growth. Did you see the fucking quarter-over-quarter projections for the GDP for corporate profits? The
It looks terrible.
forecast is negative 6.8%.
Yeah, we had last quarter we had the worst corporate profits since the COVID crash.
Yeah.
Like,
What about Q4 though? Q4 probably looks great, right?
I mean, the projection for Q4 looks like amazing, but that's not happening anymore, right? Because the Fed didn't do what, I guess J-Pow promised in the back room at JPM, which was cut rates. Like,
well, like
J-Pow's not getting a revolving door anymore.
so the thing about
Yeah.
projections I've found is that they projections will always tend towards improvement, right? Like so if things are
Yeah,
going
there's a
if things are
bias.
going bad, the projections will say good, right? And if things are going good, the projections will say, yeah, they'll stay good. Like it's just the natural optimism of humanity, right?
Yeah.
Well, it's like, I mean, if you're operating as a service in an environment where it mostly goes up most of the time, the path of least resistance is to simply just say it's going to go up and assume it will, right? I
Well,
was, like all of your Tom Lees and everyone, like they're bullish because it pays to be bullish overall in the long run. They're going to be right more than they're going to be wrong.
that's literally
And
the story behind every 60-40 fund in existence, right? Is
yeah,
eventually they'll be right. Here's the problem though, that over time and being wrong enough, their returns when they're right don't make up for the fact that they were wrong for
yeah,
years on end.
yeah, I know. But like I was trolling earlier in the subreddit, and someone was talking about like Domo Capital. You remember those guys from
Oh
GME?
Jesus, yeah.
Apparently, that guy has lost people like a bunch of money because yeah, not everything's just not going straight up anymore. It's really easy to make money when everything goes straight up.
Yeah.
Oh yeah, I saw a Wall Street Bets post where a dude like lost all his money just levering into like QQQ and spy calls over the last week.
Oh fuck.
It just
Yeah,
God.
well
got
that was bound to
obliterated.
happen, right?
Yeah, I mean,
We literally talked about that before the peak was in. We are like, imagine how many people are gonna, finally get bullish here and get trapped.
or they're going to make a bunch of money, get super confident, and lever in harder, and then just get blown out.
Yeah, well, that's the natural progression of any bull run, right?
Yeah, new paradigm, guys,
Yeah,
and
it's always a new normal.
exactly like, and you see it like there was a post about the housing market on Wall Street Bets, and there were hundreds of comments in there from people talking about the homes they got and like how they're up like 10-15% on their home price, and they got a super low interest rate, on their home, in the last 2 years or 3 years. And it's essentially the same thing. Everyone just thinks that we're in a new paradigm with housing too. Like they believe the illiquidity in the housing market is a bullish sign for their asset prices.
Yeah, I
Like,
mean, I'm glad my housing price is up, but I'm not basing any of my economic decisions on the daily or yearly value of my house, other than how much my fucking taxes go up.
Don't
yeah.
worry, your house price will go down along with your taxes.
All I care about is my taxes going down. I don't care. Like, I'm already locked into a rate I can manage, right? And I
Yeah,
don't plan on moving soon, so I don't care what it's worth.
Yeah, your job is secure too. You're tenured, so you're good.
Yeah,
yeah.
it's not as a security as you'd think today. It just means it takes them an extra year or two to fire me.
Hey, that's an extra year or two of planning you got.
It's an extra
Yeah.
year or two to get tenured somewhere else.
Yeah, that's true.
There's always Trump University.
Hey, you could always
Okay.
finish up that master's in economics.
Oh my god. It would probably double my salary.
Yeah.
Don't get me
That's
started.
good.
I've done enough ranting today. I don't need another thing.
All right, guys. Well, thanks for coming on. I appreciate it. I'm gonna wrap this up. As always, appreciate your insights.
Yeah.
Yeah, sure. Thanks for having us on.
Always have fun to get on here and just complain about everything.
Thanks for
It's
keeping
awesome.
things extremely bearish. Oh, I'll spend the rest of the week moderating that.
Well, I mean, it's not going straight down tomorrow, right?
Is it? Right?
Right?
Are we gonna
Hmm?
upward inflection at the end of that? Fantastic.
Futures opening at 3,900 tonight? No.
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 Russia's
All right.
all better. Everything's
I
fine.
know.
Don't bully.
Best coup of all time. That was hilarious. Anyway, all right.
All right. Thank you guys.
Congrats, Ron.
Yep.
See you later.
Take
Have
it
a good
easy.
one.
You too.
All right, guys. Thank you so much. I appreciate you all coming on. If you could drop a like before you leave. And Pickles Picks will be out tonight, probably around midnight or so. Have a good day, everybody. I'll see you later.